Yeah, hello guys, and welcome to my first YouTube video. I'm just not trying to get views or anything. I'm just trying to journal my journey and everything, and how I trade and what I do. Yeah, it's my first video, so don't expect anything from me. I also don't expect anything from that. I also don't have a script or something. I just pressed play on my OBS, on my video recording, and just started to talk. Also, uh, it's all uncut. I don't have a program to do that right now, and I still also don't know how to edit my videos. I also don't have a cam, so yeah, it's very minimalistic and also only for journaling purposes. So, first of all, I watched hours and hours of video material for trading, but as you guys know, it's nothing without experience. So you need to analyze the market and make your own experience with it. And you can't just watch theory. You just also need to be practicing because experience is the best teacher. So I have some kind of strategy. Uh, I first mark out confluences on like the 4 hour time frame and the 1 hour time frame. Um, I found this fair value gap here, this bearish fair value gap here, as you can see it. I marked it out. Also, down here is a smaller but still fair value gap, but I still marked it out. This time it's a bullish fair value gap. And yeah, just trying to mark out some key areas. And also, if someone who sees this and knows what to do, just tell me what I'm doing wrong. I'm open to critic and everything, so you can just tell me everything in the comments or just contact me. Um, and continuing with my trade. I don't know. It's just like some key levels. Then I switched over to the hourly time frame here. Um, there I marked out it was like a couple of hours ago, so don't need to wonder why it's back there. A box where I want to price to retrace into the zero point 0.5 area. It was here. I think the market was right there, from the most recent low to the most recent high. And this also happens to be the same fair value gap that I marked out. It doesn't have to do anything with that, but yeah. And here we see that the price like retraces in that area. You can see it very well. Um, the wick of the candle kind of gets into the fair value gap, takes the liquidity out, and then goes up again. Also, as we can see from the equilibrium, as it's called, with the gain box here. Um, yeah, but that's just the hourly time frame to mark out some confluences. Also, this was this all happened on the day before I took the trade. So I don't know if I'm supposed to do that because on the hourly time frame you don't see really much, you know. It's like only a couple of hours a day, and yeah, you can't see many patterns or candles in here, or not patterns, but like confluences. And as we can see, the price retraced here and then went up. But as you can see on my clock down there, I'm at it's the German time. I don't know how is it called, but I think it's like 6 hours from the New Yorker time. So the market opens at 3:30 or like 3:30 p.m. here in Germany, and the London market opens at 9 a.m. in the morning. So yeah, that also I forgot to mark out like the London highs and lows, the Asia session highs and lows and everything. So that's what I need to improve and implement in my next trade. So, but coming back, I will switch to the 5 minute time frame. That's where we like take the trades. Then we see, we can clearly see uh, that we entered the fair value gap here. That is marked out on the hourly time frame, by the way. So it's a bit different from here because if I would mark it out there, it would be like down there is one, here's one, here also is one. But that one is inverse fair value gap because it's immediately gets cancelled out by this candle closing below the fair value gap here. I can show it to you because the fair value gap is always a free candle pattern, closing, opening. Yeah, it's like from the wick of the first candle up to the wick of the third candle, and everything between here is the fair value gap, and here lays liquidity. But this fair value gap immediately gets cancelled out by this long bearish candle. It closes below the fair value gap, so it's called an inverse fair value gap. Um, so I would delete that real quick. So you can see the price retraced into that area, that fair value gap that also happened to be the equilibrium. It also hit that. Um, so my guess was that the price was going up, and I was right, but I like didn't know where to set my stop loss. I didn't mark out any like how is it called? I don't know, any retracement zones or points where the price usually wants to go. Uh, so I need to improve that on my next time. And then when I took the trade, I that was today, on the 28th October. Um, as you can see here, I entered and here I closed. It was like my stop loss. I set my stop loss. I opened the short position, and that's because we saw down there is a you can see a downtrend, a big downtrend. And from that on, like I inspected the market, I watched out for it, um, and I only saw it going up. And as you can see, or as you cannot see, because I don't know why it isn't marked here anymore, but I was trading on my iPad. I was still in school, so I wasn't like really focused when I took the trade. I should have marked out more things. Also, I should have taken more time to do that. Um, I don't quite know why I thought the market would go down at this point. Oops, I went. I think I was at the 1 minute time frame. No, I wasn't. I was at the 5 minute time frame. I'm sorry. Um, I marked out a big fair value gap here. I think it is on the 4 hour time frame. No, it was on the hourly time frame. Yeah, this one here. It's like a very big fair value gap, as you can see. And right now the price is also retracing into that fair value gap right now, taking out the liquidity and probably going up again, but I'm not quite sure because not every fair value gap immediately means that you should buy or sell. In this case, it's a bullish fair value gap. Um, I went on a 5 minute time frame. I know. I marked out equilibrium here. I think it was from. I know. I was here when I marked it out. It was like from the most recent high to the most recent low. Never mind. Uh, it was not quite it. I'm not sure. I'm sorry to anyone watching this if you even watches this. I'm still yapping some shit. I know, I know. Here I marked it out, the equilibrium. No, never mind. Sorry. Wrong, wrong thing. That was from yesterday in the evening. I also didn't took a trade there because it's like out of the time where you should take a trade because it's always like on the first 1 or 2 hours of the New York Stock Exchange opening or London Stock Exchange or exchange opening, and because I'm trading Forex, it can be traded on London session and New York session as well. It's a bit better on London session, I think, um, because there's like more people trading Forexies. I think yeah, Forexies it's called. Um, and yeah, I've I think I marked out something in here. I don't know if it was I think maybe it could be this one. I marked this equilibrium here out. I marked the gain box. It's not yeah. Um, and waited for from the most recent high to the most recent low. By the way, low to the most recent high. Sorry, because we were in an uptrend. Um, then the price went down, and as you can see, I didn't see it back then because this candle wasn't even formed yet, so it was still forming. But you can see like a huge fair value gap in here, like very big, like from here. Oh, I'm sorry, wrong, wrong tool here. From here to there, like a huge fair value gap. I hope you can see it because yeah, it's very many indicators here, very many things marked out. Also, for some reason, this happens to be exact the same fair value gap I marked out on the blue candle on the right. Because that fair value gap, that bearish fair value gap between this fair value gap that I'm pointing at right now, it immediately got wiped out. Not immediately because we're on the hourly time frame, so it took 2 hours, but it was immediately wiped out by this big bullish candle, by this big blue bullish candle. Um, that's also happened to be a fair value gap right here. I don't know if it's like if it's important to mark this out. I just kind of marked it out because I just did it, yeah. Um, and that fair value gap, you see the candle close above it. It's a bearish fair value gap, so it gets disposed. It's called disposed when a big um, bullish candle closes above it. So it did here. So it's an inverse fair value gap. And inverse fair value gap is I don't know always, but like a common sign of a um, reversal in a trend where like the liquidity gets swept. So, no, I'm wrong. I'm looking at my notes right now. It's a it's like a break of structure or an inverse fair value gap. That's like a confirmation of a break of a trend. So we were in a downtrend. You see that fair value gap um, got how is it called? Disrespected. That fair value gap got disrespected and is now an inverse fair value gap. And that's a sign for a trend switch. So from a downtrend, maybe I can switch to a 5-minute time frame so you can see it more easily. Yeah, we can clearly see it's a downtrend here. And then we can see it's price is going up. We are in an uptrend. Um, and that is also caused by this um, yeah, inverse fair value gap that we can see here. Also, if I'm wrong, please correct me, please. I really hope you don't you know Just correct me if I'm wrong, okay? I'm sorry. Also, I don't know if I mentioned I'm from Germany, so my English isn't that good, by the way. And also, I don't have a script. I'm just talking freely right now without any script. That's why I'm stuttering a bit and don't know what to say at some points. I also hope the you can hear me good because I don't know how my microphone is positioned good that you can have have good audio quality, but I hope it's okay. And yeah, sorry, I kind of switched off, but here back to the trade. Um, I took that trade on a 5 minute time frame because as you can see, now I know why. I know why. Um, Here, this equilibrium, like the price went up, went up, went up, went up, and that was marking from the most recent high, low to the most recent high on like the hourly or 4 hourly time frame, where I always mark the confluences. And then I saw, okay, price retraces into that fair value gap, and I made the mistake of not looking into the hourly time frame and realizing it's inverse fair value gap. I didn't see that big bullish candle because I don't think it was formed yet. It was like here or something. So it wasn't formed to the end yet. But I should have just seen that and seen that it's an inverse fair value gap. But back to the trade that I took. Um, then I saw the price retrace in that area. It also just happened to be in an equilibrium. So I thought, okay, it the price went back to take the liquidity out of the fair value gap and also retrace into that GAN box here. It's a tool here, it's called GAN box. It's a bit modified also with some settings. So it normally when you open your trading view and have the default settings, it looks very different. I can also show what I did that it looks like this another time. Um, so thought it went back down there and retraced kind of to the area. I thought it was going down, but I kind of also forgot that like an equilibrium and a fair value gap is like a continuation confluence. So it's a sign that the trend continues. Oops. And not reverses. So I don't know what my thought process was on that and why I took a short position here and thought it was going down. I really don't know because as I'm seeing right now, this is like our London session high. You can see right there because that's when London session opened and that one is clearly higher. So we can see that London session open right here. Um, and that also could be where we set our stop loss because if I didn't took the position short but long, I think it would be a winning trade. Obviously, it would be a winning trade, but you know, after you took the trade and after you did everything and analyzed everything, you know everything better. If you could look back at time, we would all be rich and everything, but that's not the point. So I don't know why I took the short trade there. Maybe I wasn't focused enough. Like I was sitting in school. Maybe I kind of thought that fair value gap and equilibrium was like a sign of reversal and not a continuation. Maybe that's why this happened to be so. Um, but you can see it perfectly. It retraces the price retraces into that area, takes out the liquidity, and after that the price goes up again. I set my stop loss here and my take profit somewhere down here, where I spotted like a fair value gap. I don't know. I think it was right here, but I think that's just I don't know how. I hope my video doesn't get taken down if I say some swearing words, but that's just some bullshit. That price goes down there. So I should have set my take profit like up here on the London session high. Maybe I should have marked out more of these, maybe like the lows and everything of the London session. But that's not the point right now. So I should have just put my take profit up here, my stop loss somewhere down here, and it would be a winning trade, as you can see, as you can very clearly see from like there to there up here with the magnet tool. I don't know what it's doing. Yeah, here, as you can see, it's this blue line. But I took a short trade, unfortunately. So I think that was kind of my mistake. I also have written everything down. Ah, yeah, now I know why. I thought the price was continuing to going down because it was hits an equilibrium and fair value gap at the same time. But these two are continuation confluences, so as you can see, we are in an uptrend. So the price, it's like a sign that the price goes up again. And my risk reward ratio was also 3 to 1, so it wasn't actually that bad because the 3 to 1 risk reward ratio is good. But unfortunately, it was in the wrong direction. So yeah, that's why I lost the trade. I mean, it's only a demo account, by the way. I'm using paper trading here on TradingView. Also, normally I try to use Trade Locker. Oh, I don't know what's there. Um, Trade Locker with a demo account. I don't know, it's Bitcoin right now. Because the markets are closed. Yeah, I need to favorize my trading pairs that I'm using. By the way, I choose Euro and US dollar because it's like a good starter pair for beginners. Um, and as you can clearly see, I'm a beginner, so I'm trying to learn. I'm trying to predict how the market moves. I'm trying to get to know that everything better. Also, because in Germany we have some issues with all the brokers that are connected to TradeLocker. There are only a couple of brokers connected to that aren't like that safe and secure in Germany because they don't pass some criteria like EU and everything, European Union, some rights and everything. So they could just scam me and take all my money. So I found another way out. There's a broker called Pepperstone, and you can connect it to MetaTrader 5. It's also, I think, even more popular. I don't have an account yet. A more popular trading platform for traders. More used worldwide. But I think TradeLocker just it looks like cleaner and everything, and it's easier. I know it doesn't have to be easy and everything, but yeah, this looks way more confusing and everything, and that's like more minimalistic and better looking. So that's why I prefer to trade on my demo account on here. But I was in school, as I said, and I only had my iPad there and not my PC. So I don't have TradeLocker or MetaTrader or anything on my iPad. I just have TradingView. I need to change that. But yeah, I took the trade on here on my paper trading account. So that was quite it with this trade. It's the first really the first trade that I took where I put some thought process behind it and thought about it and not just widely bought something because I thought I recognized something, some patterns or yeah, as you can see down here, I don't know if you can see my mouse cursor, I hope so. I made like on this demo account, I made like 500 euros, so US dollars. I don't know what's it here. That's not very much considering I have it's like 100,000 euro or dollar account, only paper trading. So yeah, but it's like not about the money or something. It's about understanding how the market moves and everything. And also correct me, please correct me if anything I said is wrong, and also if anything I'm doing is wrong, if my thought process is wrong. I'm trying to learn. I'm still learning. I know it's a long journey. I know it's not like some get rich quick scheme or something. It's like a very time consuming skill that you need to learn, and you need to put in very much time and effort to learn the skill. It's very complicated. Um, and yeah, that's why I'm learning it. That's why I'm kind of journaling it and showing it on YouTube and everything. And I don't know if anyone even sees this. But yeah, I think that's it for today. I yapped like almost half an hour of something. So respect if you still watched to this point. And I'm going to stop the recording. Also, I'm trying to like make the videos better because right now I'm just talking and moving my mouse cursor, and I think it's like very unpleasant to watch, and maybe I need to write down some keywords or like some kind of basic script or anything, because when I'm just talking like that, I always like or something. I need more. Yeah, yeah. Right now again. Um, Also, it's in a foreign language, so it still makes it harder for me. But I also try to improve that with journaling and doing it on English. And I'm also trying to upload one video daily. Also, if it's just a short one, just one daily. Also, everything is uncut. I don't know if someone wants to cut my videos for free to practice or something. Uh, you can just write it in the comments or just contact me. I'm going to link my email address. And yeah, that's quite it for today. I yapped enough. I see you guys in the next video, and have a nice day. Bye bye.